So it is Sunday, the 27th of September, 2025, right? It's the 27th or 28th, something like that. I honestly don't remember the date exactly. I think it's the 27th. Anyway, whatever it is, happy days to you all. I hope you're doing well, wherever you are, whatever time it is. And yeah, welcome to another video where I talk about stuff. And in this video, I'm going to talk about Bitcoin and crypto and the tidal wave that is coming. What do I mean by the tidal wave? Well, if you consider where Bitcoin has come from, what it is doing, and how it is being adopted by people and organizations, and governments around the world in a short period of time, right? Only 16 years or so since the launch of Bitcoin, coming up on the 17th year of the white paper at the end of next month, and the beginning of the 17th year of Bitcoin as a live network in January. We can see very clearly that the trajectory of Bitcoin and crypto has been a steady, even an accelerated increase in user adoption over the past number of years since it became slightly less of a hobbyist kind of thing in the early days as it was, and more of a serious financial device thing as we have approached the second decade. Well, the completion of the second decade. Since the beginning, in fact, before completion of the first decade, it was already being eyed by many of the largest financiers and banks in the world. And we know that companies like JP Morgan were lying through their teeth. Well, their CEO certainly was when he said, I will fire anybody that works for me and touches Bitcoin. Which was obviously not true, because the same day he said that, he was setting up a crypto trading desk in his company. And they were developing plans to acquire and begin offering crypto related products and services. So, we've seen since then, of course, many companies like Strategy and MetaPlanet and 21 Capital and, Le Bloc or whatever it's called in Paris, all these different, the blockchain group, and all these different other companies and groups, and even governments around the world, including the United States government, have set up either treasuries or, in the case of the US, national reserves. And you could say, well, that's only by executive order. That's all you need. You can make it a law, but you don't need to have a law for it to exist. So we've seen an increasing number of entities doing everything they can to acquire as much Bitcoin as they can in as short of a period of time as they can, all for one purpose and one purpose only. And that's to increase their crypto portfolio, because they know what most people still don't know, and what many people who've heard it deny, which is crypto is the inevitable future of finance. Now, you can try to say, oh, it's a ridiculous thing. Crypto is never going to be the future of anything because it's too slow and whatever. You can make all the arguments you want in the world. That's fine. Do you really think that you have more insights into what the biggest financial companies and organizations in the world are going to do than they do themselves? I mean, if you're that smart of a futurist, you should probably sell them something, because they might buy it. The people with all the money in the world, smart money, that know how to make money, create money for them, hello there. They know exactly what they're doing when it comes to generating capital and wealth. They're not going all in on this stuff because they feel like taking a crazy gamble. They're going all in on this stuff precisely because they know it is the future of finance. They know that the likelihood of crypto being critical to their financial future is higher than not. They know that fiat is done. They understand the power of the different types of assets because in the market, they know that the purchasing power of fiat currency will keep tumbling because it doesn't have any prospects of going up for the very long term. Now, sure, will there be days when your fiat currency goes up as opposed to down? Of course there will. There's always distribution and mean reversion. But if your fiat currency keeps printing more and more currency and just keeps adding more and more currency into the mix, they're diluting it and therefore reducing its purchasing power over time. That's why you can look at literally the chart of any single fiat currency over the last however many years you want. And you'll see that, first of all, on average, they don't last more than 30 years. Second of all, they all fade away. Third of all, the reason they all fade away is for the same reason. The purchasing power is diluted into nothingness, which causes inflation, which causes problems with interest rates, which causes problems with bonds, which causes problems with lending, which causes problems with borrowing, which causes problems with debts, which causes problems with all kinds of things: production of goods and services, distribution of goods and services, salaries, the whole deal. It's all very dependent on a debt based system, which is what we currently have. In a crypto system, except for those who will enter crypto through back channels and side channels, and essentially they will enter crypto through a debt based system that's a sort of bridge for them, right? To buy crypto with debt and then hold it in a fiat based centralized exchange or account or whatever. Those people, they don't get crypto because they keep making the same mistake. They keep staying in the fiat world. But the actual crypto system itself is all based around scarcity of the assets, as well as divisibility of the assets, portability of the assets, uh, uncensorability of the assets. And that's really the most critical one, is the uncensorable nature, right? The direct peer-to-peer nature of real decentralized cryptocurrencies, where you can send or receive Bitcoin or any other real crypto, like Litecoin or Cardano or what have you, to someone, or you can receive it from someone without a middleman. Now, of course, many people use middlemen, like I just explained. They'll use middlemen exchanges, right? They'll use middlemen wallets. They'll use middlemen third-party apps to hold and manage their funds, which is crazy because the whole point of crypto, the whole point of Bitcoin, anyway, is to be an escape hatch from the traditional financial system. Yes, it's an electronic peer-to-peer cash network that secures itself. But why is that important? Because it allows people to escape the financial system that exists. That's the only reason that Bitcoin really was created. Right? That's the main reason that it was created. Right? Yes, it has all these other tremendously powerful qualities: divisibility, portability, globally scalable, all these wonderful things. Right? Permanently storable with public ledger records or private ledger records, whatever it might be. There's all these other great qualities that blockchains have, and DAGs and whatever else you want to use. But you can see that over time, in the last 16 years, we've had a couple 100 million people dabble in this stuff, in Bitcoin and cryptos, or alt cryptos. And sure, there's not a lot of people relative to the population of humanity using this stuff, which just shows you are still relatively early. And you're also relatively late when it comes to certain things like trying to acquire massive amounts of Bitcoin at at a cheap price relatively. But if you're a huge company and you have hundreds of millions or hundreds of billions or trillions of dollars of assets, it's really not very expensive at the moment. 100K for a coin, if you have many, many billions of dollars in the bank, it's not a big deal to acquire, some thousands of coins and essentially secure your company's future. You don't necessarily need 100,000 bitcoins, right? It's kind of ridiculous. Like, how much of the capital in the world does your company have? What percentage of it? Try to figure that out. Out of the 21 million potential bitcoins there could ever be, of course, there are far less. How many bitcoins do you actually need to keep your percentage about the same as it is now? In fact, you can probably still acquire more than your actual current percentage of the global capital proportionally if you have a lot of money in your company and you can afford to buy however many bitcoins it would be to stay in that percentage. It will probably be that you can easily afford a percentage, because we are still at a time relatively early where the bitcoins that you buy are still a lot cheaper than they could potentially be if it 10x's and goes to a million, if it 100x's and goes to 10 million, if it 1000x's and goes to 100 million, if it 10,000x's and goes to 10 billion, 10 million, whatever it is, or a billion, or whatever. So, yeah, the point is, right, the tidal wave is inevitable. When it will happen, it really doesn't matter. If you're a long-term holder, it really doesn't matter. It only matters if you have a short-term view. So if you're a trader, then the long-term view is moot to you, and you should completely ignore everything about the long-term matters, because they're not going to help you trade. Right? The only thing that's actually going to help you trade is information, like I said, weekly time frame, daily time, 4-hour time frame, 90-minute time frame, 45, 33. Those things are all great to look at sort of the higher time frame pictures of a day trader, but then where you're actually going to be concerned as a day trader is like 50-minute and under, if you're trading low time frames. Usually. Now, it doesn't mean you have to do it that way, but the point is, at the 15-minute and lower time frames, you get plenty of occurrences of opportunity throughout the day on practically any asset you're trading, which is why it's a good idea to trade on those time frames, because you're less likely to miss out on the occurrences of opportunity, right? Whereas with higher time frames, you may not have so many occurrences, or you may not have any occurrences of opportunity on a given day. So that's why I say, as an investor, I mean, everybody has to whether or not they should hold any assets whatsoever.